This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B, for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Happy President's Day, everyone. Well, Bitcoin is inching its way back toward its Valentine's Day record high of $49,700. There appears to be a bullish bias in the options market as large investors sell long-term puts below $40,000, showing they are not anticipating an extended or sustained price drop below $40,000. The XBX Bitcoin price right now trading at $48,698. It's up about a tenth of a percent over the past 24 hours. The XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. And joining me now with more from Atlantic City, New Jersey, is Lyn Alden, founder of Lyn Alden Investment Strategy. Welcome, Lyn.
Hey, thanks for having me.
Good to have you here. All right, so Lyn, Bitcoin made a run for $50,000 on Sunday, but fell short at $49,700. What will it take to break beyond $50,000 resistance?
Yeah, that's a pretty natural resistance point because there's a lot of natural selling at that kind of psychological barrier. And this is something we've seen over the course where you kind of run into certain resistance levels. So Bitcoin had to test 20,000 several times before it, kind of firmly broke above it. And so I think we're finding a similar situation here where, until either another large buyer steps in or just from, repeated attempts, to break over, that's just a natural kind of pause point to let the market recover a little bit. But most of the on-chain indicators still show that the overall structural forces still look pretty constructive for a continued bull market for at least, a good chunk of this year.
By contrast, do you see any risk of an impending crash?
Not at the moment, but of course, those are always possible. It's a very volatile asset. Some of the things you can watch overall is kind of broader liquidity, because, for example, if you look back in March 2020, we saw a pretty rapid sell-off in digital assets that were totally unrelated to digital assets. And so, if you were to get some sort of news event that can cause liquidity shock, it should show up in the crypto markets as well. But overall, a lot of the indicators look constructive. We don't look as overbought as we looked prior to the recent, correction, the one that occurred back in January. And so overall, it looks somewhat healthier. But until it breaks over 50,000, I do think there is, basically risk to both the upside and the downside here. There's several thousand points where it could kind of fall and correct if it keeps failing to break over that 50,000.
Right. Morgan Stanley is considering investing in Bitcoin. BNY Mellon, Morgan Stanley want to custody crypto. So every day we're seeing some institutional interest building. How far do the network effects of Bitcoin have to grow before we reach critical mass?
I would say 2020 ended up kind of being the year for critical mass, and because that was the year of institutional buy-in, and that's a huge game changer for an asset that has spent about a decade being mostly a retail phenomenon. And so now it's at the point where, for example, I was consulting with a hedge fund a few weeks ago, and one of the things I recommended was a non-zero Bitcoin position, and they were like, "Yeah, it makes sense. Let's go on to the next topic." And so rather than being like this weird thing that you can consider and then ask like your regulator team, like, is that even allowed? It's more normalized now in the institutional and investment world. And so the fact that we've kind of breached that threshold, I think is a pretty important thing. And so it's not really a fringe asset, kind of with the historical connections that the people often think of it tied to Silk Road or things like that. It's increasingly looked at as a financial asset. And so it's at the point now where I think it's pretty well on its way on the S curve of adoption. And all that remains is price.
I often see this comparison between the 10 trillion market cap of gold and the 650 billion market cap of Bitcoin, and this idea that the difference equals how much Bitcoin has to catch up. Do you agree with that characterization?
I think it's a number to be aware of for general context, but it's certainly not a magical number, especially because if you look at gold, that's several different types of investment. And so that number comes from the estimated amount of gold that has historically been mined. And because most gold mined is never destroyed, it just keeps recycling. But that can be broken down into about $2 trillion of private investment, a couple $1 trillion in central bank holdings, and then you have jewelry and you have all these other use cases. And so you can kind of start from the bottom and say, okay, what percentage of the private investment will Bitcoin take? And you can work your way from there. And there are arguments, on both sides. Some people saying that, maybe it should reach kind of the private investment level of gold, so maybe it can reach 2 trillion. But then, of course, there's arguments that show that, because Bitcoin has more utility than gold in some ways, that it could reach a higher market capitalization. And I think a tangible example of that is that we don't see corporations putting gold on their balance sheet, but we do see now a handful of companies putting Bitcoin on their balance sheet.
You just published an article on economic Japanification on your website. You conclude that the United States is on a very different path from Japan, with faster money supply growth, a structural current account deficit, and fiscal deficits that are persistently larger, mainly due to healthcare and defense spending. So the U.S. has a more inflationary aspect to it, you say. I wonder if there is a difference between these two countries on how and at what volume they subscribe to Bitcoin in this financial environment.
I mean, there are certainly people better than me to provide an overview of the Japanese market as it relates to Bitcoin. I've been interviewed on a Japanese source before about Bitcoin, but I don't have a good numbers for how big it is there. But one thing you do see is that, in Japan, you have had asset price inflation over the past decade. And so people often refer to the 30-year bear market. But that's divided into a couple different segments. And if you look at the Japan's central bank balance sheet, that really started ramping up in late 2012. And ever since then, we've seen the stock market, it's been in this, it's one of the quietest bull markets in the world because no one's talking about it. But if you look at Japan, ever since it bottomed in 2012 or so, it's been in pretty much a raging bull market, one of the strongest equity markets worldwide after the United States. And so you see property values in cities are really high there. Now you're finally seeing over the past 10 years stocks getting a good bid after that 20-year kind of correction they went through. And so it's not surprising that there'd be interest in other types of scarce assets in an environment where even if there's not high inflation, you have just zero yields on most of your financial assets.
Okay. But from your concluding remarks, I just noticed that in the United States, at least, it seemed like you were suggesting this would be a very inflationary environment. I wonder, in the context of investing in Bitcoin amid a declining dollar, do you see room for more people to jump up on board Bitcoin amid that inflationary environment?
Yes, I think so. I think a key thing to watch is upcoming in a couple months, we'll have low base effects. And so because inflation was very low in March and April of 2020. And so the CPI print for the upcoming March and April period will probably be pretty high. Then it'll probably cool off a bit. And then, but going forward, if this broad money supply keeps increasing at the rate it has been, you're likely to see more persistent inflation levels, potentially well above the Fed's 2% long-term target. And so in an environment where yields are pinned near zero, and inflation's running at 1, 2, 3, potentially higher, then that causes a scramble for assets that hold up better in that environment. And historically, that was gold, and I think for a lot of investors, that still will be gold. But for other investors, that's increasingly things like Bitcoin.
Just quickly, one last question: do you think that DeFi is at all any threat to Bitcoin in terms of taking away market share?
I don't think in the long term yet. It's something worth watching. I think during a bull cycle, you're naturally going to see, I think, some of those DeFi, tokens and Ethereum itself do quite well, potentially outperforming Bitcoin in percent terms. And my biggest concern would be that, if we eventually hit a top and then we have a correction, I'd be more concerned about some of those assets than Bitcoin. And so overall, I think DeFi is more of a threat to some of the centralized exchanges, some of the things that it could take market share from them. But overall, between Ethereum and Bitcoin, I think you do need to watch the long-term market share between them, because right now, Bitcoin doesn't really have any threat from its derivative tokens, like some of the Bitcoin Cash or some of the other monetary tokens. Those Bitcoin's firmly won that war. And I think the only kind of real network effect in the space besides Bitcoin is Ethereum. So it is worth watching.
Great. Thank you for your updates on the markets, Lyn.
Yep. Thanks for having me.
All right. That was Lyn Alden, founder of Lyn Alden Investment Strategy in Atlantic City, New Jersey. Coming up, what insights can Bitcoin investors gain from social media data? Joe Visani, co-founder and CEO of Lunar Crush, joins us next. Welcome back. My next guest heads a company that analyzes social media and online sentiment to help make crypto investment decisions. Joining me now from Orange County, California is Joe Visani, co-founder and CEO of Lunar Crush. Welcome, Joe.
Well, hey, thank you for having me.
Good to have you here. All right, so I'm going to put forward this idea to you from Bloomberg columnist Matt Levine, where historically governments coordinated social activity around money and value, and we used fiat currency as we used fiat currency. So now society is mediated by social media and by Twitter and Reddit. Would you agree?
I would agree. I would agree, especially in the markets and what we've seen from places like Wall Street Bets over the last couple of weeks. Our company, Lunar Crush, has been looking at social data over the last couple of years with regards to cryptocurrencies. And unlike traditional stock markets that have 10Ks, earnings reports, there's a lot of fundamental ways that you can identify value in the space. With cryptocurrency, specifically public blockchains like Bitcoin, you've got to look at analysis much different than you did in the past.
Right. So you have a number of charts to show us. The first one I want to bring up is a comparison between Bitcoin and Ether on social activity. What can you tell us about this chart? Oh. I think
Reddit, YouTube, Medium, any sort of news out there, what we're doing is we're scanning all of these things for mentions of Bitcoin, comments of Bitcoin, and actually across 2,000 other cryptocurrencies. And what these are, individual people that are starting to chat and talk across these channels about Bitcoin. And so what you're seeing is, hundreds of % increase in the amount of people, especially in the last couple of months, that are starting to talk about Bitcoin individually. So we're seeing new entrants of retail joining the market. Even though we've seen a big amount of institution as well, this is also a retail rally.
Okay. Actually, I think the one we have up is on social contributors, but you also have another one on YouTube volume. It appears there was a spike of YouTube activity in June. It's gone down in February, but the price of BTC is skyrocketing. So tell me what's going on here.
Yeah, I wanted to share this one on YouTube because this is actually where most people in the space, retail-wise, are going to learn about Bitcoin. There's a lot of folks on YouTube creating content. That spike back in June was, some stuff that happened around DeFi, and then also the halving was going on then, and so a lot of stuff was being created. But and we're seeing just the same amount of people creating content, but an increase in the price of Bitcoin.
Okay. And what about this one on social dominance? It appears to show the price of BTC falling as social dominance goes down.
Double check on the thing I'm looking at here is you're actually seeing price moving up towards the end, and this is a 1-year social dominance. So social dominance
the price is in the blue, right?
You're looking at social dominance, and if the thing's off a little bit, well, actually price should be in the purple there.
Okay.
Looking and moving up, and then social dominance is across that. So not unlike market dominance with market cap, Bitcoin kind of fluctuates around this 60% level. When Bitcoin goes on a rally, it goes up a little bit. You're seeing here a pretty steady dominance of social conversations happening. So this is really their share of social across everything that we collect against the rest of the cryptocurrency market. You're seeing a big drop off in Bitcoin conversation. It's not a drop off in conversation. What it is an increase in other conversations that were happening over the last couple of weeks around a lot of altcoins, mainly something called Dogecoin.
Of course. So you're right. So the purple is the price, and the blue was the social dominance. But I was curious why. So then, why is the price? It seems to be not correlated. So the price is going up, but the social dominance is going down on Bitcoin.
Yeah, so what we're looking at there is not, like I said, not a decrease in actual volume out there, but this is to kind of show is there a run up in potentially other conversations that are happening around different projects? And so when you dive a little bit deeper and you look at overall social volume of Bitcoin specifically, it's through the roof, and it's the highest we've ever seen since we've started collecting this data as a company. And so you're seeing a massive increase in not only Bitcoin, but a huge increase was for a couple of weeks there around some altcoins, mainly because you've got celebrities and Elon Musk and other people tweeting about some large projects that are out there.
All right, I'm going to bring back, I mentioned the first one. This chart is a comparison between Bitcoin and Ether on social activity. So again, tell us about this chart.
Yeah, so I wanted to pull this up, and your previous guest was talking a little bit about Ethereum versus Bitcoin, and the amount of activity happening on there and what to look for. I mean, you're looking at social engagement across the last year on Bitcoin of over 200 billion engagements that have happened, and you can see the increase in that happening specifically over the last couple of months as we've started to see people pushing into the market. Ethereum's about a 10% share on that with 22 billion in engagements that are out there. But we have seen a slight fall off in the engagement around something like Ethereum because people are looking towards potentially other blockchains out there with, the kind of the wait for Ethereum 2 and fees that are happening around the platform. There's still the largest audience of people building on Ethereum, but you are going to see some other projects and some new entrants actually building on some different blockchains.
All right, great. Thank you for joining us, Joe, and giving us your insights.
Yeah, thank you so much for having me. I appreciate it.
All right. That was Joe Visani, co-founder and CEO of Lunar Crush in California. Time now for the chart of the day. Here's a look at trading volumes on leading fiat exchanges, which peaked in January. If you recall, at the beginning of January, we saw a strong run-up in the BTC price from 28,000 on December 31st to 40,000 on January 9th, an increase of over 40%. So was this when Tesla was buying $1.5 billion worth of Bitcoin? Well, we have no way of knowing that. But what we do know is that a market which regularly trades billions of dollars a day has the capacity and the infrastructure to absorb seriously large orders. And that's it for All About Bitcoin. I'm your host, Christine Lee. Check us tomorrow with guest Michelle Phan, makeup beauty ambassador, as well as a partner for Lolly. Join us tomorrow morning at 9 a.m. as well in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.